What if I told you that entire nations could be on the brink of financial collapse in 2025? What would it mean for the millions of people living in those countries? Could the domino effect of their economic downfall ripple across the globe, impacting even the most stable economies? These aren't just hypothetical questions. Right now, behind the headlines and political speeches, there are countries staring down a financial abyss, facing skyrocketing debt, runaway inflation, shrinking economies, and even social unrest. Some of these nations were once economic powerhouses, while others have struggled for decades. But they all have one thing in common. 2025 could be the year they go broke. Do you think your country is on the list? Or maybe a country you've traveled to, invested in, or read about? Stick around as we dive deep into the stories of 10 countries that could face economic catastrophe this year. We'll break down exactly how they got here, the bad decisions, global pressures, and unexpected crises, and explore whether they can turn things around before it's too late. Now, before we jump into the list, I want to hear from you. What do you think are the biggest reasons countries go broke? Is it corruption, bad policies, external pressures? Let me know in the comments below. And while you're here, don't forget to give this video a thumbs up to support the channel and subscribe for more videos. All right, let's dive in. First up on our world tour of economic calamities, Venezuela. Venezuela remains in a prolonged economic freefall, with hyperinflation rendering its currency practically worthless. Oil production, once the backbone of its economy, has plummeted to a fraction of its former levels due to mismanagement and U.S. sanctions. GDP has shrunk by over 75% since 2014, and poverty affects 94% of the population. Rebuilding Venezuela's economy will require addressing corruption, stabilizing its currency, and revamping the oil industry. Collaboration with international organizations and easing sanctions could pave the way for much-needed investments. Diversification into agriculture and tourism, combined with social programs, could help reduce poverty and create a more sustainable economic model. Next up on our economic disaster tour, we're heading down south to Argentina, a country that's no stranger to economic turmoil. Argentina's financial struggles are nothing new, but 2025 could mark a breaking point. The country faces rampant inflation, exceeding 140% by the end of 2024. With foreign debt exceeding $276 billion, nearly 45% of Argentina's GDP, its ability to meet repayment obligations is questionable. Corruption, inefficient government spending, and a lack of investor confidence exacerbate the situation. The central bank's foreign reserves are at historic lows, forcing reliance on IMF loans. Potential solutions include implementing strict fiscal policies to curb spending, renegotiating debt terms with international lenders, and incentivizing foreign investment by stabilizing exchange rates. Additionally, Argentina must address structural issues like tax evasion and inefficiencies in its export sectors, such as agriculture. Hold on to your hats, folks, because we're about to delve into the economic train wreck that is Lebanon. Lebanon's economic collapse is one of the most severe in modern history. Since 2019, the Lebanese pound has lost over 95% of its value, wiping out middle-class savings. In 2025, Lebanon's economy may continue deteriorating due to political paralysis, a lack of reforms, and its reliance on a failing banking sector. The national debt stands at 150% of GDP, while poverty affects nearly 80% of the population. Immediate steps include securing international aid contingent on structural reforms. Lebanon must implement transparent banking regulations, overhaul public finance management, and restore faith in its currency. Revitalizing the agriculture and small business sectors could provide short-term relief while longer-term solutions are developed. Next on our global economic collapse tour, our next stop is Egypt, a country grappling severe hyperinflation. Egypt is facing a potential financial crisis due to its soaring debt and reliance on foreign borrowing. External debt now exceeds $170 billion, while the country spends over 40% of its revenue on debt servicing. A weakening Egyptian pound and high inflation, which hit 37% in 2024, are eroding household purchasing power. The Suez Canal and tourism revenues are insufficient to offset the high import bills for essentials like food and energy. To stabilize its economy, Egypt must reduce its dependence on external borrowing and focus on domestic industrialization. Increasing agricultural self-sufficiency by investing in desert reclamation projects could reduce import costs. Additionally, Egypt could expand trade within Africa and pursue privatization reforms to attract foreign direct investment. Next up on our economic doom and gloom world tour, we're heading to Ghana, a country that's been grappling with economic challenges and political instability. Ghana has been hailed as a beacon of stability in West Africa, but its economic troubles are mounting. External debt reached $58 billion in 2024, nearly 70% of GDP. Meanwhile, the country faces a persistent trade deficit due to over-reliance on raw material exports like cocoa and gold, which are vulnerable to price fluctuations. Currency depreciation has also worsened inflation, which stands at 38%. Ghana must focus on diversifying its economy by investing in value-added industries, such as processing cocoa domestically rather than exporting raw beans. Negotiating better terms with international lenders and increasing transparency in government contracts could restore investor confidence. Encouraging renewable energy projects could also reduce energy costs, creating more fiscal space. Now, before we dive into the next country on the list, I want to hear from you. What do you think about the reasons we've discussed so far? Are these countries doomed, or do you think there's still a chance for recovery? Drop your opinions in the comments, and while you're at it, let me know what topics you'd like us to cover next. Should we explore the most successful economic turnarounds in history, or maybe dive into the rising powers shaping the global economy? If you're enjoying this video, don't forget to give it a thumbs up. It really helps support the channel, and if you haven't already, hit that subscribe button and turn on notifications so you never miss a new upload. Let's keep this conversation going. Hold on to your kebabs, folks, because we're heading to Turkey, the land of ancient wonders, beautiful beaches, and enough sovereign debt to sink a fleet of Ottoman galleys. Turkey faces significant financial challenges, with inflation exceeding 60% in late 2024 and its currency, the lira, losing significant value. President Erdogan's unorthodox monetary policies, including keeping interest rates low despite high inflation, have scared off investors. The country's foreign debt, nearing $460 billion, puts immense pressure on its foreign reserves. To avoid further economic turmoil, Turkey needs to restore investor confidence by adopting conventional monetary policies. The central bank must prioritize inflation control, even if it means short-term economic pain. Structural reforms to reduce energy imports, such as investing in domestic renewable energy sources, could also alleviate foreign exchange pressures. Our next stop on this whirlwind tour of economic calamities takes us to Pakistan, a nuclear-armed nation grappling with a whole lot more than just geopolitical tension. Pakistan's economic outlook for 2025 is grim, with inflation reaching 38% in 2024 and debt repayments surpassing $25 billion annually. The country faces a twin deficit, fiscal and current account, that drains its limited foreign reserves, leaving less than $3 billion as of late 2024. Political instability and reliance on external financing compound the issue, while flooding and other climate-related disasters harm agriculture, the backbone of its economy. To avoid bankruptcy, Pakistan must increase tax revenues by broadening the tax base and addressing loopholes. Renewable energy investments and water resource management are essential to mitigate climate risks. Furthermore, enhancing trade relations with regional partners like China and Central Asian countries could improve its export potential. Hold on to your hats, folks, because we're heading to Africa's most populous nation, Nigeria, a country with a booming economy and a debt problem. Nigeria, Africa's largest economy, is at risk of severe economic instability due to its over-reliance on oil revenues, which account for over 85% of its export earnings. Falling global oil prices and inefficiencies in the oil sector have reduced revenue, while corruption and weak infrastructure limit growth in other industries. Inflation exceeded 30% in 2024, and debt servicing consumes a staggering 96% of government revenue. To address these challenges, Nigeria must diversify its economy by investing in technology, agriculture, and manufacturing. Anti-corruption measures and improving energy access could unlock economic potential. Additionally, renegotiating debt terms with international lenders and focusing on regional trade agreements could provide immediate fiscal relief. Our next stop on this somber tour of economic turmoil takes us to El Salvador, a country grappling with the devastating consequences of gang violence, a humanitarian crisis, and an economy that's been battered like a coffee plantation in a storm. El Salvador's adoption of Bitcoin as legal tender in 2021 has not delivered the anticipated economic benefits. Instead, it has exacerbated financial risks, as the government's significant Bitcoin holdings are highly volatile. With a debt-to-GDP ratio nearing 85% and a limited ability to borrow internationally, the country faces a potential default. To stabilize its finances, El Salvador should reduce its reliance on cryptocurrency and focus on traditional revenue streams like remittances and agriculture. Strengthening the regulatory framework for its financial sector would also attract FDI. Additionally, improving education and infrastructure could enable the development of new industries, reducing dependency on volatile economic experiments. Our final stop on this whirlwind tour of economic calamities takes us to the island nation of Sri Lanka, a place that was once synonymous with pristine beaches, lush tea plantations, and a laid-back tropical vibe. Sri Lanka's debt crisis spiraled into chaos in 2022, and 2025 might see further deterioration. The country's debt-to-GDP ratio is above 120%, and it struggles to service its external debt of $46 billion. Tourism, a major economic driver, hasn't fully recovered post-pandemic, while imports outpace exports, leading to a persistent trade deficit. Fuel shortages and political instability further strain its economy. To turn the tide, Sri Lanka needs to diversify its economy by investing in renewable energy and technology sectors. Engaging with international creditors for debt restructuring and securing long-term partnerships with countries like India and China could help stabilize the economy. Strengthening anti-corruption frameworks would also boost public trust and investor confidence. And there you have it, the 10 countries that could face financial collapse in 2025. From spiraling debt to political mismanagement and economic instability, the challenges are real, but so are the solutions. And before you go, don't forget to hit that like button, subscribe to the channel and turn on notifications so you don't miss our next deep dive into the ever-changing world of geopolitics, economics, and global power shifts. Stay curious, stay informed, and stay ahead. Thank you so much for watching, and I'll see you in the next video.